What do you think the biggest risk to property developers is in 2026, Dorian? So, a key risk to property developers.
Well, that was a good question. I think there's I mean, it depends which sector you're in, and depends which part of the UK you're in. So I don't want to get into nitty-gritty details, for example. But when I think of this question, in Wales right now, there's a political change going on. Obviously, it's the Senedd is up for at the moment it's Labour, and it could be Reform, or it could be Plaid Cymru, or it could even be Labour again, or I doubt it's going to be Conservatives. But whoever it is, that is my biggest risk right now, because it's going to have a direct impact on my, the social housing targets, the funding that's allocated to it. So yeah, I think for me, that's my biggest risk, and that's what everything else just is subpar to that. So hopefully that goes well. Then, other than that, we still have the same risks that we can control, planning, etc. Like, we have a nitrates issue now down in Wales that is just not seeming to be resolved, which is holding up 2,000 homes.
I'd say those are known risks, right?
But they're known, as you said, they're between that planning, etc. Is the But for me, very, very specifically, that's my biggest risk. Or do you? And then for anybody else going to development, all I would say is it's very hard. They should know their own sector, their own sub market, to see what is that key thing for them.
Yeah. So you would say anyone out there, particularly in the social part of property development, where they may be reliant on government funding, whether that's coming through providers or direct from government, political rhetoric and the political landscape could change those funding lines and could be an underlying risk to those type of property
For
development
me,
strategies.
yes, yeah.
Yeah. Stu, what would you say? Biggest risk to developers of 2026?
Well, as soon as I see risk in 2026, I just think of the banking run. Really, I think the big problem for me is if there was a call on the banks and money becomes too volatile, then that could just knock everything out. It knocks people's jobs out. It knocks people's affordability out. It knocks so many things. It disrupts everything, really, the money system. And I do think this is the year that we could spike. I think it could go out of control. I mean, just look what's happened, obviously Iran and all the rest of it. But if you just look at the monetary policies of Venezuela, Argentina, Iran, India, Cyprus, like Turkey, all these currencies are going all over the place. They're printing so much. China, and I do fear that the UK is going to have to do the same to try and sort out so many of these problems that are so deep. To inject the country is that when you print a load more money, everything gets so volatile. Inflation could spike again. We could, they're obviously trying to keep rates fairly high, but I think the demand now is that they need to lower rates, and then it affects everything. It affects every chain supply. Having some cash in the bank is going to be important, and I think it's going to be a bit of a bloodbath. I think because the planning system has been so difficult for the last few years. We've been in a declining market, so it's great for Dorian. He's rode out the hard bit where he was forward funding stuff in a high inflation environment where he's had to take a load of cuts. Now he's fixed things moving forward. If the market tanks, he doesn't really care too much. In fact, he actually gets more bricklayers looking for work. I mean, I've had more phone calls in the last week from contractors asking for business and for people to either to come back or to have a change around at the worst possible time. I've got a loft fitter who was with me for about 3 years, went done his own thing, and he's just called me yesterday saying, I rang at the wrong time. I should have rang you sort of Q3, Q4, but I've come at a bit of a sticky wicket where I am, and I need to change jobs and love working with you as an opportunity. But the trouble is I've just said yes to 2 more fitters who I've also known. So there's supply demand, right? That's a big issue. And I think it all comes down to the money and people either spending money and investing or moving. So we'll see, but that's my biggest risk at the moment. It's just not taking too many risks. I think taking risks moving forward, but not being stupid, not overpaying for stuff is the big one.
So more acute on your financials.
Yeah, just be aware of all the opportunities that, just look 6 months out, and I think there'll be a lot more opportunities out there. Unfortunately, through the demise of other people's misfortune is the problem. Now, I don't want to take advantage of anyone ever, but if someone's bought something and it's £250,000 overpriced now, and they've had a bit of a tough planning journey, they've not got consent for what they wanted, and the site's worth no more than what I was willing to pay for it 18 months ago, but they might be 200, 300, 400 grand underwater. You want to help them out. You want to try and do a JV. You want to try and do what you can, but I'm not one of those ones that are like a bottom feeder who like preys on people's misfortunes. It makes me feel sick for them, but that is the market. It's decisions they made, right?
Yeah. Well, I would somewhat agree with yours, but slightly more specific to Europe. I think I think one of the biggest risks, it may play out in 26, it may lag slightly, but there is a huge exodus of institutional capital from European bond markets, and we're already seeing the bond markets in the UK could flip at any moment. But I think Europe is just a calamity waiting to happen. And for any lunatics out there who thought we should have stayed in Europe, you're going to rue that decision, and you'll be grateful that Brexit happened, because we needed to make sure we had an insular economy
Well, the
from the
UK's bailing
euro.
them out, apparently, aren't we, with a payment?
I mean, yeah, I mean, it's just crazy how incompetent Europe is, and just the exodus of capital from those markets. But big capital, big smart capital allocators, the family offices, the PE funds, the stuff that the media will not cover, because they know that that means that the Brussels elite are going to suffer. But you can look up this stuff and you can see what's happening to capital flight. And I think the euro, and if the euro obviously collapses, which I think we're starting to see the sign. Well, we're already seeing the signs of. That's obviously going to have a huge impact on our exporting economy in the UK. So we need to do the best we can to have trade alliances in the Northern Pacific and with America. But I think there'll be a fallout there that could directly impact the UK in a big way. So thinking of banks and borrowing limits and things like that, just look at that as a proportion of your development pipeline, of your asset base. If you are risk on with highly leveraged short-term borrowing, and then you need to exit onto mortgages in a market where the bond market might get spooked again, then you could see a tightening up of lending, and then you could struggle to get out of your facilities, or selling into the open market. So I just think it's a bit of a guess whether that happens this year. I think we may just see it get worse this year, and it may play out 28, 29. But it's not looking good for Europe at the moment politically, and the bond market and flight of capital is definitely a big issue.